Okay, so I'm here with David Bloom, who is a very long-standing friend and experienced finance director, entrepreneur, also a trustee of the Growth Project. And when the coronavirus epidemic started to take its root and throw us into lockdown, it became very important and very obvious that cash flow planning was going to be critical for businesses. So Dave offered to do a cash flow tracker, as simple as possible was the mission. Since he has written it, he's done a number of webinars for small, medium-sized businesses and also for some of the charities on the Growth Project. And we thought it'd be really useful just to do a recording so that this can be actually sent out to other people who haven't managed to make the webinar. So good morning, David. How are you?
I'm good, Paul. How are you doing?
I'm talking to you as if we haven't been messing around with the record function on Zoom for ages trying to get it to work, but it's nice to see that you put some clothes on today. That's really good news. So David, I think maybe in less than half an hour, if you can run us through how the tracker works using screen share. And then hopefully what we can do is put this out, and then if people want to get hold of the actual spreadsheet that you've developed, they can do so. There's no charge related to it. It's just hopefully something that will help people get through this crisis in as best a way as they possibly can. So I'm going to shut up now. I'm going to mute. I'm going to pass it over to you, Dave, but I will just jump in if there are any questions that I think people might have as they're going through it. Over to you.
Great, Paul. Thank you very much for the introduction. 30 minutes is about the limit because after that, people tend to switch off. So I'm going to dive straight in and share my screen with you. Paul, if you wouldn't mind confirming that you can actually see the tracker, then I shall carry on. You might be on mute. All good? Okay. Paul's all good. Okay. Right. What we've got here is a simple cash flow tracker. I've designed it that way on purpose, but hopefully what it's got in here is many years of my experience, mistakes made, etc., to make it as effective as possible. There is a start here page which will walk you through the instructions, how to sort of use it. And at the very bottom, if there is any issues, where to go for help. That's my email address. And there's also a tick list, which I'll run through in about 10 minutes time once I've shown you the basic model, which is sort of the classic traps and things to watch out for when you are creating a cash flow. But the main event is the cash flow tab here in the middle. And the basic idea behind the cash flow tracker, obviously, is to manage your money in, your money out over the horizon. This is actually a model that has 52 weeks in it, so you can see out for a year. And the analogy I always use is you're driving down a country road. Do you want your lights on half beam or full beam? Obviously, the better the beam, the further down the windy road you can see and manage any sort of pitfalls or obstacles appropriately. So let me just orientate you with the model. There's two ways to start this model. You can either go back a month, so in this example, the 10th of April, and plug in your actual figures from your bank statement to get up to date. And I amended this morning so that we're in the week at the minute of the 15th of May. Or the quick start approach, which is what I want to demonstrate today, is you dive straight in, put in your bank balance at the end of last week, and just begin plugging away for money in and money out if you want to get a quick handle on your cash position. What you have at the top here, so you put your name at the top here. This little box here where it says funds needed, you'll see as I go through a couple of examples, a date will appear in there if indeed you do need to raise any money or if there's a shortfall. It also tells you when your cash low, which is your lowest cash point over the next 52 weeks.
So that's like, so Dave, that's like an alert that comes up but isn't there until you basically dip into negative, yeah?
That's correct, and I will demonstrate that. Yep, exactly. And then it might be that you've got an overdraft facility. So just because your bank balance might be £5,000, if you've got a facility which you would enter as negative in this cell, I'll put in 20,000, oh, sorry, 2,000 as an example. Although you've got no cash, you've actually got 2,000 available because you've got an overdraft facility. Now this section at the top, which is frozen, and you'll see when I open up the rest at the bottom, is just really a summary of what's going on in the detail down below. The detail is where you will be entering figures. So clicking, there's a little plus here, which will open up the money in section, which I'll talk about in a second. There's a little plus here, which will open up the money out section, basically what your expenditure. Also at the top here, I just want to draw your attention to the little 1 and 2 there. If you click on the 1, what it's doing is it's collapsing the cash flow into a monthly view. You can see here we've got April, May, June, July. Often the banks prefer to see things on a monthly basis, as opposed to if you open it up again by hitting the 2, the detailed weekly basis. It allows you to collapse. Also clicking this line at the top has the same effect. This is all automated. So just as a general principle with the model, as it says in this cell here, data entry is only in a yellow cell. Don't touch anything that isn't yellow.
Dave,
So
Dave,
yeah.
I'm sorry to cut in. I suppose that once you show it in a monthly view, you could be missing out the fact that, let's say, week 2 of the month, you actually run out of money, but money
Yes.
comes in week 3. So I guess it's important to work on this yourself on a weekly view, but then if you have to present it, then
Yes.
they might only want to see a monthly view.
It's a very good point. It could be that between, yes, in 2 months it's all looking fine, but one of those weeks in between those months takes you into the red. That will be picked up. The funds needed box, which I'll show you in a minute, that does actually pick up the week as opposed to the month end, so you won't get caught out. So I've actually plugged some numbers in here, a bit like Blue Peter for those who remember that, his one I did earlier. And I'm just going to show you how I would do this. So I've printed off my bank statements, or if I've got 2 screens at home, I've got the bank statement up on the screen. And at the end of last week, the 8th of May, I had £5,000 in the bank. You'll see here, I am assuming people have a basic understanding of Excel and they have used sort of spreadsheets. That is sort of a prerequisite in using this tool. But just removing the 0 there. So you can see I've plugged in my £5,000 balance, and you can see up here the figures showing as the balance. Let's just put in an overdraft facility. I'll put £2,000 in, which enters as a minus. We had that before. So you see that I've got £7,000 available. Okay, I'm going to go through the costs first rather than income. So obviously you have much more control over your costs. You should know what's coming out your business and when. So let's just go through a couple of examples. I've got a subcontractor, someone that works with me fairly regularly. That person's £1,000 one-off occasion I owe on the 22nd of May. So I know I'm going to have to pay that person £1,000. And you can see what's happening is it's summarizing the money out there. And this row here, cash out, is really just the same as this row. It's good just to look at a summary of the whole piece at the top here, but it's just reflecting what you're building up down below.
Dave, Dave, just to make one thing clear, I think, which is there's a difference between something being just an expense that's on your profit and loss account and actually when you pay it. And what we're interested in here is when you have to actually pay it. So if you've got a contractor and you pay them £1,000 a month, it doesn't really matter. Just put £1,000 in for every month because it's going to happen. But if you, let's say, just use them once and then you pay them 30 days later, you want to put that amount in where you're actually going to be paying it rather than when you're actually using the service.
That's exactly right. Yeah, this is a very good point. Thanks for calling me on that. This is a cash flow, and in these sort of situations, cash is king. So it's when the actual cash is going to leave the bank. That's correct. Key point. So materials, using what Paul was just raising there. Let's just say in the month of April, I'd ordered some materials. They've come in. I'd used them, but now I have to pay for those materials. Maybe I was on 30 days terms, and that's going to cost £750. So you can see now I've spent 1,750 that week. Again, it's reflected at the top, and it's beginning to eat into my facility here. I've now got 5,250 available. I also had a consultant that helped me put some materials together, fairly reasonable, £500. And those are the 3 suppliers that week. End of the month, you can see here, now this is based on all weeks ending on a Friday, as I've said up there. I typically base it on a week end, and payroll will come out. Actually, in this example, it's a bad one because it would be the Sunday, but let's just assume the physical payroll for my staff would hit the bank the following week. So my first person is £1,800 net. That's what they would get in their bank account. The next person, £2,500. And the third person, £3,500. Obviously, everybody gets paid on the same day. And what you see happening now is, as a result of having no money coming in, spending 2,250 that week and payroll 7,800, I've breached my available amount by £3,050. So what's flagging up here is you can see the alert that says on the 5th of June, which is that week there, that's when you're out of money at this point in time. And you can see the current account balance, the cash flow is 12,850. Now, the reason it's more than the 7,800 is because payroll, obviously that happens every month. And I've just used the example, I haven't gone out for the whole year, but I'm just using the example that when you put a number in and you know it's going to happen every single month, from a forecasting perspective, you should make sure that you roll that out across the year.
David, what would
Yes.
you advise people? You made a really important point there, that the amount you're putting in there for people's pay is a net amount.
Yes.
Now, under normal circumstances, I can see you've got a column below that for PAYE, which is the money you've got to pay the payroll tax.
Yes.
But at the moment, obviously, nobody's paying payroll tax because we're in the middle of the coronavirus, or hopefully coming to the end of the coronavirus lockdown period. But certainly for the foreseeable months, the HMRC are not actually asking for any payments. So would
Yes.
you advise people to somehow record that backlog that they're building up, and then maybe put it in later, further down the road?
Yes.
That could be that could really hit you badly if you forget about that when you're looking at your cash flow and they say, oh my God, I've suddenly got £10,000 I've got to pay.
Yes. You have to, it's another very good point. You have to put the numbers in the cash flow when you think you're going to pay it. So let's just use that as an example. Here, let's just say we owe PAYE and NI of £2,000, and that is in the month of May for April. So that's April PAYE. Under normal circumstances, it's due on that date. Now, on the basis HMRC have told you you can delay it, or if they haven't, you get in touch with them and explain what you're doing. And it's always, in my experience, good to keep HMRC up to date, although we are in interesting times because they have said you can delay. What I would do in this example is I would zero it out, like there, so I'm not paying it that week, but then I would put it in, let's just say I've agreed with HMRC on the 2nd of October. I would actually put it in there. I might color code it slightly differently so I know it's a delay. And if you right click in Excel, you can add a note where it says new note, and you can put a note that says this is April 20 PAYE delayed. The key to Paul's point is you don't ignore it and sweep it under the carpet, you put it in. What you're effectively doing is you've bought yourself £2,000 of saving for it's a cash flow delay until October.
And presumably you would do the same thing. For example, if your landlord has given you 3 months rent free, you
yes.
could do the same to times it by 0, so that there's something in there which says that where that 0 says there's something going on. and then you can actually put it back in later when you anticipate having to pay for it.
That's exactly right. A zero is a flag to say there was something in there, have a look at it, and it's about the level of detail you put in, but don't
It's a really nice
ignore.
trick. That's a really nice trick, doing times zero, so that it
Yes,
actually records. I've never seen that before.
good. Okay, um, so in this example, let's just come back to the model. We're not doing that. We are okay at the minute, or we think we're okay. Let's put in the £2,000 there. And again, there's just a formula that's saying that's rolling out each month. And we'll come back to the point about how you then manage the cash flow. Capital expenditure, somebody new's joining, and I know we're going to have to buy a couple of laptops actually. So there's £3,000 that I think I'm going to have to spend 26th of June. But you can see already that you can't afford to do this based on what's setting out here. So it begins to sort of build up the picture. Another one is direct debits. In these times, personally, if you can, I would be cancelling direct debits for the simple reason that you can control when you spend the money. With direct debits, you often forget about them and they come out the account. And depending on the size, they can bite you. So obviously, if you had rent on a direct debit, that would be something I would be looking to delay. Obviously, I would be having a discussion with the landlord. I wouldn't cause them any surprises.
I also
So this is your
heard of people who forgot to cancel their direct debit with HMRC, and obviously HMRC very happily take the money, and it's a bit more difficult to get it back once you've given it to them.
that is what I would call an own goal. Yes, that's something you don't want to do. So mobile phones, there's £100 direct debit typically, and again in this example I have gone out and put it out for the whole year. One example I'll come on to when you do the actuals is direct debits go up. So you should always be thinking when you put actual figures in, if numbers go up. So let's just say in this week, the DD came in and they put their prices up and it's 125 a month. What you would do from a cash flow perspective is you want to be updating that to 125 as well. So it's forecasting, but it's forecasting accurately, particularly if you know numbers have moved up or down. Equally, a direct debit could be cancelled, in which case you'd get the saving if you've got it run rated all the way out. So here we've got insurance comes out on the 4th of the month. Do that. And here we've got staff lunch. Actually, that's not a direct debit. I'm not sure why I called that a direct debit, but you get the idea. Okay, so coming up to income, this is actually designed for the growth project for a charity, but this could just as equally say customers. And this is about when the money is received. So same principle, if you send an invoice out the week of the 10th of April, you do not record the money on the 10th of April. This is about when you're getting paid. And this is critical because I'm sure anyone who knows is running a business, people typically never pay on time, bigger companies especially. But using your debtors ledger, your receivables ledger, whatever you record your list of invoices that are owed to you, in this section is where you would plug when you think you're going to get it. So in this example, I've been promised £3,000 from that customer, £1,000 from that customer. And you can see, if I just undo that again, you can see here what's happening at the top. If I just put the 3 back in and the 1, you can see that the income's being summarized here. This one up there is just a reflection. It's the same figure as the 4,000. I've got another 3,000 there. And actually, if I get that money in by the week of the 5th of June, we can see that I'm not in the red until the 3rd of July. 3rd of July is up there, but I've managed to push out my funding requirement to 8,200. Now, what you can do, and this sort of comes back to what Paul was saying or asking me before, clearly you've got payroll coming out at the end of the month. You typically don't ever touch payroll. Long before then, if you had to make people redundant, etc., it would all have been dealt with. But payroll's pretty sacrosanct, as you'd imagine. So have I got any options here to bring down the 8,200? Well, I could not buy the capital expenditure. I could move that to that week there. And what that will do is it brings this down to 5,200. Okay, well the PAYE, I'm paying £2,000 there. Can I push that out by, let's say, a couple of weeks? Per the chat before, you probably would have been on the phone to HMRC and put it much further out. But let me just move that by a few weeks. What I'm trying to do is bring this number down so that I don't have a funding requirement. Well, clearly you can't do that day in, day out, week in, week out. You have to have a business that works, and you've got to cut your cloth accordingly. But I can see here that I'm expecting £4,000 in from that customer. Let's just say that money came in there. Okay, actually I'm going to call it £6,000 just to show you something else. You can see that if I got £6,000 in that week, I'm back in the clear, but I've got this 3,200 problem that I need to deal with in those 2 weeks. Well, either that comes from getting on the phone to this customer who's supposed to be paying me 5,000 then, for example, and trying to do whatever you have to do to say, look, can you pay that early? That's one option. That solves your problem. Or is there anything I've got on the costs that I can do? I'm actually quite limited, unfortunately. There's not much going on there. But again, just demonstrating the idea that what you're trying to do is look along here and see where the problem arises and give yourself the opportunity and the time to either collect money in quicker. Often, I see so many debtors ledgers where you see all these invoices, and if someone just put the time and energy onto collecting that money in, it can solve an awful lot of issues. Another option is to go to the bank. If you collapse this, let me just show you one other thing to demonstrate how I would have a conversation with the bank. I'm just going to put a big number in over here. Let's just say plus 30,000. And I'm going to put a big negative figure in here of, let's just say, minus 15,000. Don't care, paying someone a lot of money there. If you come to the summary, if I was to go to a bank and presented the monthly cash flow, and they would see that I've got this profile here of £2,000 positive, £15,000 positive, I then go into the red, and it looks like I've got an £84,000 problem in September. But then it comes back into the black for me, and my cash is reasonably okay for the rest of the year. You can begin to have a discussion with the bank around helping with that facility. Now here, for this size of business, just high level, 84 grand might be a bit too punchy for them. But let's just say you could agree a temporary overdraft facility for £90,000. Your problem's solved. They might be prepared to do that depending on your relationship. It gets a little bit low here, but then you're back in the black, and then it might be that they reduce that down to 60,000 or some number. But the fact that you can demonstrate this to the bank way in advance rather than ringing up the week and saying I've got a problem, in my experience, often allows you, it gives a lot of confidence to the bank.
David, I've got two technical questions. First of all, if you applied for and got, let's say, a bounce back loan,
yes,
or a business interruption loan, would you enter that amount in? Where would you enter that amount on this model?
What I would do in the model is actually I would put in here bounce back loan. Again, a very good point and very relevant. And for those who haven't applied, they are incredibly easy to come by, from my experience. I would, let's say I'm applying this week, I would put in the 50,000 there. And actually, from a repayment perspective, this is only a 12-month model, and you've got 12-month grace. But let's just say you were to start repaying. Rather than having a line down below for the repayments, you can enter a negative income, if you like, and put the repayments on the same line. So you could either put them up in the income section as a negative, or if you wanted, you could put them down below. Me, I would just keep it all on.
As simple as possible, so that making it as a negative on the same line seems really, really sensible.
Yes.
My second question was, if you are furloughing some of your people,
Yes.
How would you cover that off in this model? Where would you put
So,
the
so the
relevant?
way the furlough works is you obviously pay your staff as normal. You may have actually put a pay reduction in place, but this is what you pay your staff. And then I would have here, you would have done your furlough calculation. You'd have got your receipt from the HMRC portal, and I would be doing it's sort of the reverse of the bounce back loan. So furlough, I would be putting in here as a positive the 3,000 that I got back. So you can switch the signs around if you want, but generally costs go in as negative, income up above as positive. But that's where I would be putting furlough. I like to see things kind of grouped together with what they relate to.
One of the things I love about this tracker, it's the first time that I've actually seen it, is that you're putting stuff in and you are actually able to sort of make decisions and
Yes,
see what impact that decision has. And you can
yes.
do it in a really incredibly interactive way, because sometimes intuitively you think, I'm going to save some money by doing this, that, or the other, and actually you put it in here and you see it doesn't really help you very.
No, what you typically see is you're just storing your problems up for later, but it forces you to think about how you resolve it. One other point as well, this is geared towards a simple small business where you know and you understand your cash flow, but it's extra complicated if you're, and it still does work, but if you're in a slightly bigger business and you've got reports or a sales guy or someone's responsible for production, you need to sit down with them and go through the detail.
Is there
Um,
any particular size of business in terms of, or complexity of business, where you think this suddenly becomes too simple? I mean, you think that the bigger the business you are, the more likely you are to have a cash flow tracker. Right? My experience is that that's not the case at all.
yeah, no, look, if you've got international operations, you've got multi-currency, you've got loads of different legal entities, you've got subsidiaries, it doesn't really work for that. But for a UK-based business that you control, whether you're doing 1 million turnover or 100 million. So, for example, £100 million turnover recruitment business, this will work perfectly fine. It all depends on the level of detail you want to go to. If you've got 300 staff, you're not going to have 300 lines here for payroll. What you might have is, if you click on the plus here, you could have your payroll detail, for example,
Yeah.
and that might be a separate report that you list, your 300 staff, whoever they are, and it could be that the total at the bottom is £50,000. You would just come back to your cash flow, and this would become just
So,
payroll.
so someone with a modicum of Excel skills could actually take this model and build it out.
Yes, and that's yeah, exactly. And I'll go on record. I really don't care what you do with this model. Obviously, 2 pages of disclaimers in terms of once you do that, it's yours. But yeah, and my details are there if you want some help in how you might want to do that. This is normally the time where I tend to find people glaze over when I talk. So there's a couple other things I want to just touch on. The reason these are green is you need to be in the discipline at the end of each week of updating the cash flow for actuals. So you've gone through and you've forecast, but let's just say we've jumped forward in time and we are looking at our bank statement and we are putting in the actuals for the week of, where was it? The payroll here, okay? We forecast that person was 1,800, but of course we gave them a pay reduction because of what's going on with COVID. So the amount that came out the bank was 1,676, and there it was only 2,000, and there it was only 3,000. So in doing that, you are updating for actuals. I also sort of flipped that to actuals. You would have done these weeks as well. I've just jumped forward in time. But it should be an aid memoir for you to know, actually, I've got that saving. Now I put a formula in here, apologies, but the formula in here is just keeping the same number to make it easy. But if that had been sitting there as 1,800 and 2,500 and 3,500, you would know that by putting in the actuals, oh yes, I've agreed that for the next 4 months. You would then go in and change these numbers to reflect it accordingly. So the discipline of updating actuals and saying to yourself, what does that mean for the future, allows you to keep the forecast up to date. When you've gone in at the end of the week, and you've updated for actuals, that figure there at the bottom must agree to your bank balance. It's very, very important, that point. Very often, I look at forecasts where people have kind of gone through and they're focused on the future because they haven't kept the actuals up to date. This balance here could be out by 20, 30,000 pounds. You know, what if that was really sitting at minus 5,000? You hadn't kept it up to date. It paints a whole different picture in terms of what your balance is.
Is there a level of um, inaccuracy that you can live with? Because I mean, I remember when I was learning accounting 150 years ago, it was, you know, if you're out by a penny, you could be out by a million. But presumably with this, because it's quite a simple tool, if you could spend a lot of time going through the minute numbers in order to get it to balance. Should you be doing that, or should you just be happy if you're, you know, within, you know, a couple of percent, for example?
I think it's good to get it accurate if you can, but if, as my old boss used to say, you find yourself hunting the weenie, there is no point wasting half an hour if you're out by £3.50. What I would do in that example is, even if I had it down in the cost saying, I would have a line called rounding, something like that. And if I needed to put in minus £3.74 just to get the balance right, I'm not going to beat myself up that I can't find where it is. The inner geek in me likes to get it accurate, and when I work with the controllers I work with, we do try and get it to the penny. But it's no point driving yourself mad for a small business. Plenty of other things to worry about.
Another quick question is, if I was using this, I would probably save multiple versions. I'd have like a master version, which is my final copy, but then to run different scenarios, because I'm not good enough at, you know, scenario stuff within Excel, I would just have some different scenarios. I'd have one with, you know, 50% staff, or, you know,
Yeah.
don't pay this or don't pay that. So I've got a record of what the impact is.
Yeah. You can, that's another level on. I mean, putting in scenario analysis and formulas is something you can do to enhance it. So, I mean, you could, in here, for example, you could introduce a line, again, depending on your skill set, which was a variance, or call it a scenario. And it might be 10%, for example. You want to, let's just come up with a number. Again, this is where I'm sort of breaking the model a bit, but you could turn around and say, you can see, I mean, you might not be comfortable putting in formulas. You could add up what you're expecting in a week and multiply that by the formula there, and call that minus. So what that's saying is, I'm expecting in 3, 1, and 3. You could roll this out. Sorry, let's just do it there. So you can see in this week, what it's doing is it's calculating 10% of whatever you think you're going to get in, just as a precaution, and that is feeding through into cash flow. And it might be that you want to do that, you know, you can say 20%. There's simple things you can do like that, but to be honest with you, for this level, I would be going, well, that $3,000, maybe it's just going to be $2,000, etc.
I can see I've unleashed your Excel geekiness there with talking about scenarios.
Yes.
So is there
Thanks for
anything
allowing
else,
me to do that.
any other tips or tricks on how to use this model?
So let me just run through the tick list. These are the things I sort of put together, which through doing these webinars, people have sort of asked, and I think they're kind of the things to watch out for. Some of them I've probably covered, but let's see. So enter all your direct debits. We've covered that. This is about, each week you're going to overwrite your actuals, ask yourself why they're different, use that as a guide to update your forecast. With the salary costs, make sure you break out the net pay and the employer's NI. They happen at different times in the month. It comes back to what we were saying, is when things are paid. VAT we haven't touched on. VAT is always the one that can buy, and when businesses get into trouble. Well, at the minute, anything after March has been delayed to next year anyway. But VAT is collected on the 7th of the second month after the quarter. It's often a big number, and forgetting to forecast that can cause major problems. So that's a watch out. That one we've covered. This is the point about when you book income. It's the date you receive the money, not the date you raise the invoice. Be prudent. It's always best to assume things are going to cost more than you think, and income's going to take longer to arrive. It's better to have what I call a good guy surprise than a bad one, as nobody gets upset if money comes in quicker than planned. Use the past as a guide. This is the discipline of updating it. Share the cash flow with key people in the charity or business. It's the point before about making sure everyone's dialed into this and you've got an accurate view, line of sight on what's coming in and what's going out. You can drive yourself mad, but keep asking yourself, have I captured everything I need to? And this is the main one. It's never, ever perfect. You just got to try and strive for a no surprises environment. Don't get caught out with like VAT or big costs. That's always, for me, a no surprises environment is a hallmark of a well-run cash flow and finance function generally. And for those who are still awake, I think that's the end of it.
That's amazing, Dave. I mean, I've got two big takeaways from this. First is that this is a brilliant planning tool. It's something that you can interactively use and even sit down with team members and show them at a time of crisis like this why you're making decisions that you're making, what's actually happening, what happens if I do this, what happens if I do that. So for actually making decisions, it's an incredibly simple and powerful tool. And the second takeaway I've got from it is that a lot of businesses at the moment have probably pushed to the back of their mind the fact that they're going to have to pay VAT, national insurance, PAYE, landlords, all the things that they're deferring.
Yes.
Using this model and taking it out 12 months or even beyond means that you must record those numbers and you must put them in somewhere else, because all you're doing is burying your head in the sand if you're not doing that, because it will come back to bite you. And knowing the liability that you're building up over the long term is really important for the decisions that you're making today, because you might think, actually, this business is fine, cash is fine.
Yes.
Not at all, because you're going to have to pay that money at some point. So better to make the savings now and spend less money and have lower losses, and therefore keep your cash balance more healthy, because it's going to come back to bite you in the bum later.
I echo that 100%. I can't tell you the number of times you can look at a cash flow and you just don't pay anything and suddenly things look quite rosy, but you are storing that problem up for later. And as painful as it is, you just need to face it head on and know when it's coming and plan accordingly. And
That's
you know what?
amazing.
Invariably, with a bit of planning, you'll find a way through.
Yeah, that's
Businesses
amazing.
will find a way through.
Dave, thanks so much for that. I'm gonna put this. I think we'll both probably put this recording up, providing I hit the record button right, and hopefully we'll have some sort of a link where people, I don't know, to a Dropbox or something where people can actually download this file if they want to use it. So we'll put that up in the post. Probably put this on LinkedIn. I'm certainly going to share it with the Growth Project cohort, with anybody else who wants it. But on behalf of everybody that is using it already and wants to use it, it's a brilliant contribution you've made to people by doing it. And I know you spend a lot of time on it, and also a lot of time sharing it with people individually. So hopefully now we've got this video, we can pump it out to more people.
Great.
And they can see the benefit of it. So
My pleasure.
thank you very, very much, David.
Thanks, Paul.
We'll check in soon.
All right. Thanks a lot. Bye-bye.